Hey Facebook, hey, what's happening? It's Cashflow Kris here with a quick little live video. I wanted to talk to all of you guys about what's going on in the stock market right now, what's going on in real estate, give you a little bit of a market update. So as far as market updates, the Phoenix market is absolutely insane. Just talked to, or didn't talk to, I saw a friend of mine post about how someone said the Phoenix market is flat, and that's absolutely insanity. Hey, Anthony Gonzalez, Anthony Ruiz, and Robert Flowers. Thanks for joining, guys. We're going to be talking about the current market conditions in the stock market as well as real estate. So they were talking about how it's flat, and she mentioned that the median price in Arizona is up to $255. I'm going to show you guys some numbers from just a couple months ago, and that's when median was at $240. So this real estate market's absolutely crazy. Hey, Anthony. Hey, if you guys got any questions on these stats, let me know. I mean, I just pulled these off the internet, so it's easily attainable information. So today we are going to talk about investing versus speculation. Okay, a lot of people speculate as investors when they think they're investing, and they're really not. There's a big difference between the two, and we're going to go through it. Hey, what's up, Greg Cook, all the way from Florida, man? Thanks for joining. Victor, go Niners. You're right, man. I can't wait for this year. So let's talk about today. Today is a classic example of why the stock market scares the crap out of me. Today, look at right here, almost 1%, 0.78%, the stock market went down in one day. If my portfolio in real estate went down 1% one day, I wouldn't know what to think of it. That would be insane because that doesn't happen. So you can see at our peak, we were at 26.6. Today, we ended at 24.7, down 7.7% on the year. Extrapolate that out over the 12 months. If we have the next two-thirds of the year just like this one, and we're going to be down 20%. Do you really? That's why I say stop the insanity. We are pretty sure we're going to have a down market. So a lot of people are putting their head in the sand and saying, "Oh, don't get out now. Don't get out now." Come on, guys. Pay attention. You're already down 7.5% on the year. So that's just what's going on. So I wanted to do a little research and find out, how are mutual funds doing? We got our Dave Ramsey guy pitching mutual fund all day long. I'll argue against that all day long, but let's actually look at it. So what I decided to do is I decided to look up the top 5 mutual funds. So these aren't, I didn't go hand pick these. I didn't select these. These, go Google it. These are the biggest 5 mutual funds in the nation and probably in the world, I would imagine. And let's see how they've been doing, because I'm not going to lie, the stock market's been fire, right? Everybody knows that. Stock market was down here a few years ago. It's way up here. That's great. Everybody built wealth, but it's important about what you keep. The reason, again, I say stop the insanity is because so many people have lost half of their net worth, 30% of their net worth, because that's all it is net worth. They don't convert that to actual cash. So let's have a look. So here, the number one, PIMCO. This is one of the big, huge ones. This is the biggest one in the world. So you know what? Down 12% in 5 years. We're not even going to talk about them. They're not even worth discussing. So let's move up here to Vanguard. Their total fund, their total fund, right? This one started at 41 back in 2013, and right now it's at 68.40, up 64%. Pretty good, right? That's 12% per year. Not bad. Let's move to the next one. American Funds Growth started at 39, up to 53, up 36%. That's a 7% per year growth. Your mutual fund guy is going to tell you, hey, that's a good return. Here we go. Vanguard 500. This one is another really good one. Started at 154, is up to 252, 63% in 5 years. Not bad. These are some of the ones that have helped people's funds grow. Now, you're like, but wait a minute, Chris, these are the biggest funds, and a lot of our markets have been double digit year over year, right? Well, that's right, because these are subpar. That's the average. These are subpar. This is what the average guy goes into. So these are not going to be on par with the market, even though this is what everybody's going to push you into. And then this right here, this one's where they get you, okay? Diversify. You got to diversify, right? So they're going to get you in this good fund up here, Vanguard. They're going to get you in this, making 64%. That's good. But they're also going to throw you in this bond. This bond lost money. Again, we're not even going to talk about it. It lost money. In this market, in 5 years, it lost money. That blows my mind. How horrible of an asset manager do you need to be to lose money? Now, it's a bond market, right? So when the rest of the market goes down, bonds are going to be doing better. I get it. Bonds don't do well in a down market or in an up market. That said, if you're in an up market, why would you invest in bonds? Doesn't make sense, guys. What they teach you doesn't make sense. All right, let's move on. What's up, Robert, Larry Guerrero, Jerry, Alberto? Thanks for joining me, guys. Oh, there's my mentor from many years ago, George Henderson, the Cashflow King. Thanks for joining. All right, so look at those. That's what most of America invests in. Biggest mutual funds, okay? Now, let's look at real estate. I will tell you, I randomly selected these cities. I picked Phoenix because that's where I'm from. I wanted to give you a spectrum. I didn't want to go with the big cities because a lot of them have crazy rates. I didn't want to talk about LA, Orange County, because that doesn't really equate to the rest of the country. Plus, not a lot of us are going to be investing there. I'm going to be talking about cities that you should be and need to be investing in. All right. So let's take a look at real estate over the last 5 years. So we'll start with Phoenix. So the median in 2013 was 143, and today it's 240. My friend just posted on, go see MJ's post. It's 255 now, and I believe it. We're going up 10% a year. It's insane. That's because we had a lot of room to grow. So that's 68% in 5 years, kind of on par with the best performing mutual funds, the other top 5, right? So here's Portland, Oregon. They're a more expensive market. Their median was 270. Now they're up at 420. Not a surprising number for Portland, if you know what I'm talking about. Columbus, Ohio. They were at 101. Columbus is a great investing city. I push our clients to Columbus all the time. We've got great contacts there. They started at 101. They're up to 148, 46%. Orlando, Florida has absolutely killed it. Look at Orlando. They were 118. Their median is now 226. That's a 91% increase in values, okay? So now this is what we're going to compare, because this is all that the stock market has to offer, right? So it's comparable. You will see that, because this is only equity. This is not cash. You're not making any money on this. You bought a stock that was worth this. You wrote it for 5 years. Now it's worth this. So all you're making is equity, okay? And this is why real estate is so much better. So you have your growth, which a lot of this is not going to be, you're not going to be able to capture this unless you refinance or if you sell. So I'll give you that as well. But that's the same with stocks. You're not going to realize that money until you sell. So there's that. We'll keep that aside because we're going to go back to it. Now, why is real estate better? Real estate's better because you can rent real estate. We don't care about the value of the property. You know, we when we buy, we're looking at cap rate when we're looking at multifamily. That's one of the many numbers that we look at. But that's an easy number to judge. It's pretty much a cash on cash return. How much cash you put in, how much you're getting out after all expenses. So don't tell me, oh, what about vacancy? What about this, that? No, this is after all of that, but before debt service. So this is a cash on cash. So argue with me if you want. I would say these are fairly easy to attain numbers. So you can see Phoenix, Orlando, average markets. You can get an 8 cap. You can find that. You know, if you're an investor, you know what you're doing. You're going to be able to find that. Portland, San Diego, maybe towns like this, you're not going to get the cap rate. You're not going to get quite the return that you can get elsewhere. Hey, Zach, there's my man Zach in the house. Zach, I'm telling everybody why the stock market is such a horrible investment and why they need to call you and me to invest in real estate. But if you go to a place like Columbus, they didn't have quite the growth as far as dollar. They had great percentage growth, but you can get a much higher cap rate in Columbus. So your properties aren't going to be worth as much, but you're going to get a better cash flow. All right. So that combined with this is our return. Okay. It's not just the speculative stock market where it needs to go up in value for you to make money. So let's take a look at our total return. All right. So Phoenix, 97,000 in appreciation in 5 years, 57,000 in cash flow. Again, this is after all expenses, so don't get all crazy with me. That's real money. 154,000. Portland, 222,000. Hey, Kevin, Brian, thanks for joining me, guys. Check this out. The stock market sucks. I'm showing you guys why. Columbus, $107,600 combined. Look at that cash flow in Columbus, $60,000 cash flow. And then Orlando, 155. Orlando's the big winner in the last 5 years. I didn't even know that, but searching the numbers, their cash flow is great. Their appreciation's been great. Greg Cook, you got it, man. Orlando wins. So these are great numbers, obviously. I mean, it's simple. You guys know how to do math. We smoke the stock market. But this isn't even the thing that makes it the best. The thing that makes real estate the best is leverage, the power of leverage, guys. Because that $140,000 house in Phoenix, you didn't have to pay $140,000. Let's back up a second. I'm not even taking into consideration that we buy stuff under market. That's another one of the things that you can do. You can't buy stock under value. You have to pay what it costs. Real estate, this $140,000 house, I guarantee you, me and my friends are not paying more than $110,000 for that house. But we're not even gonna worry about that because we're talking about average Joe returns here, okay? So you need 20% down to buy that house. Plus I just threw in another $5,000 for closing costs and stuff like that. So you only have $33,000 cash invested. You made $154,000 in equity and cash flow. That's a 467% return because you leveraged. Think about that. Look at that. Look at that. That's in 5 years. That's almost 100% ROI a year. Hey, what's up, cousin Jeff? How you doing, my man? All right. So let's just take the challenge, right? So 5 years ago, you said, I have $100,000 cash and credit because you got to have credit to invest in real estate. So I have $100,000 cash. Am I going to invest it in the best Vanguard, right? The Vanguard that did well. We're gonna pick the good one. We're gonna give them their winner. Am I going to invest $100,000 into this, or am I going to invest $100,000 into 3 single-family houses in Phoenix, Arizona? All right. So this is what that looks like. So you put $100,000 into both. So the 3 Phoenix single families, you've earned $171,000 in cash flow over the last 5 years, right? Victor, I bought a 3-1 package deal in 2016. So Victor Huerta is living this example, guys. Get on the train. Victor's could sell you a property as well. There's lots of people. I'm not trying to sell you on me. I'm trying to sell you on real estate. There's lots of great guys that can sell you real estate. We can do it. Victor can do it. Kevin can do it. I'm selling you on the concept of real estate because this is how you gain wealth. Okay? Rich Lopez, what's up, man? Rich can sell you real estate. Randy Matthew just joined. Randy can sell you real estate. All these guys can sell you discounted real estate, guys. Okay, so let's look. So 170,600 plus 291,000 in appreciation on $100,000 invested in 5 years. What does the Vanguard give you? The one that did really well, 63% in 5 years. You know, that's not bad. 0 cash flow. They don't do that. They don't do cash flow. So if you need income, if you're looking to retire, you need income, forget about it. You're not going to get it. They're going to shove you in some crappy annuity and you're going to get 2 or 3%. You're not going to get 12%. Get out of here. Okay. Appreciation, you know, not bad. 163. You turned 100 to 163. Congratulations. You got to work for 10 more years. Real estate. 462,000 in income and equity. Stock market, 63,000 in equity. It's simple math, guys. It's simple math. Not to mention the stock market's about to take a dive, okay? Oh, but Chris, what if stock market takes a dive? That's the whole point. We don't invest. We don't speculate. We invest in cash flow. We don't care. We're not investing saying, all right, if I buy this, it's going to go up. It's going to be worth more. No, that's what all the idiots did in 2005. Hey, Charlie, thanks for joining me, man. Send this to your clients. Your clients need to hear this. Okay. So people in 2005, 2006, 2007, they bought with negative cash flow. They said, hey, it's worth 250 now. At this rate, it's going to be worth 350. Some people made money doing that, but those were speculators. Do not deceive yourself. Do not confuse yourself. Those are speculators. Those are not investors. If you buy something that is negative cash flow, if you buy something that takes money out of your pocket every single month, that is a liability. That is not an asset. We don't invest in liabilities. We only buy assets, okay? Stock market, the only way for you to make money for the average investor, let me reiterate, average investor, I'm not talking about people who do puts, calls, and all that, because obviously if you learn how to make money, you can make money. I'm talking about the average Joe. They're not going to be able to do that, So that is my rant for the day. Randy knows it. Charlie knows it. Rich knows it. All you guys know it. So I'm trying to sell you on the concept of real estate. Invest in real estate, especially over the next 5 years. You're going to have a negative stock market. And if real estate's negative, it doesn't matter because you're going to have positive cash flow. Cashflow Kris, that's my message. I'm out. Talk to you guys next time.